Welcome back. Now let us continue again with our personal liability company. There was an aspect there we didn't address, which is your legislation. What is the success looking into the legislation of a personal liability company? The success there becomes the idea that directors are forced by the Act to act responsibly and work harder towards the success of the company to protect their personal assets. That becomes a success now for shareholders especially, because they know that the directors will be responsible, because should they fail, should the business suffer, should the business not be successful, that would lead to the directors paying using their personal assets. And then looking into the failure, lengthy registration requirements may delay the actual operation of the business, and shareholders can lose on profitable opportunities. Now let us look into the public company together with the non-profit company. The success now of managing a public company is that it is managed at least by one competently, highly skilled director, and the failure again becomes the issue of director's fee will increase the company's expenses to reduce the net profit. So one thing you recognize here with management of all companies, these factors are similar. The success and failure for management of the three companies is similar for a private personal liability company and a public company. Looking into taxation again, they can obtain tax rebates, and they are involved in, if they are involved in CSI projects, that is similar again when you're looking into a personal liability company and when you are looking into your private company. So they are subjected to double taxation. For example, shareholders pay secondary tax. This can have a negative impact when you're looking into the company that is already financially struggling. As we proceed, capital now becomes different as a factor, because the success here is the issue that now a public company can raise large amounts of capital as shares or as debentures can be sold to the public or shareholders. The failure is that large amounts of capital are required to start this type of company. Large amounts are required. Division of profits. High profits and good returns to the shareholders indicate success of a company, and by now you know what does that mean. It means when the company is being successful, the value of shares would increase, which is good. So if a share was 50 Rand, it would increase maybe to 100 Rand because of the success of the business. Hence, we are saying the value of share increases. Maybe if one share is 50 Rand, it can move to being 100 Rand. What is the failure? Shareholders may sell their shares when dividends are low, resulting in a drop in the share price. Same now, if the share price is 100 Rand, then the company underperforms and gives shareholders low dividends. The share price will lose value, and this would mean maybe the share price could be 50 Rand. Then, looking into legislation, the company and its owners or shareholders are separate legal entities, which may encourage more people to join the company. And then the failure again is the idea that now formation procedures are time consuming, as many legal documents need to be submitted. Then we have non-profit company. A non-profit company may be well managed as it requires a minimum of 3 directors. Then the failure is the idea that directors may mismanage the business funds, as they may not have direct interest in the non-profit company. Their aim may not be to serve the community or needs of a non-profit company, but to benefit themselves. Looking into taxation, a non-profit company is a company that is being operated not for the primary reason to make profit. So now they may qualify for tax exemption if certain criteria are met. This can be the idea that maybe the company is dealing directly with giving back to the community, so that can help them to be tax exempted. So looking into failure, required to pay income tax if engaged in activities that are unrelated to their business purpose. So should they decide to offer services or decide to sell, they will have to pay income tax. That can be the failure now. Then looking into capital. The success is that there's unlimited number of founders in a non-profit company, which may contribute to more capital to the company. So there's no limit. More people can come in, more people can form a non-profit company. So the failure is that founders may contribute limited capital or may not contribute capital, which may not be sufficient for the establishment of the operations of such a company, which is a non-profit company. Then division of profits. The profits of the company are used to finance other needs of the company. So basically there's no division of profits here, but the focus becomes the idea that they need to serve other needs of the company, maybe give more to the community, maybe improve infrastructure, but it is never about sharing the profit, because remember, the aim is not to sell or the aim is not to make profit. But looking into failure, it may discourage potential investors from investing in the company, as this is a non-profit company. So that is the failure there. Legislation. The company and its owners or shareholders are separate legal entities, which may encourage more people to come and join the non-profit company. And another thing is that the formation procedures are time-consuming, as many legal documents may be needed to be submitted for this company. So this is to say, looking into the different companies, especially your private personal liability company and your public company, you'll see that there's a slim difference, because almost all the other factors, how the companies are managed, is basically the same way. The difference maybe is on the issue of capital. To say a public company can have more capital because they are able to sell their shares to the public. But when you're looking into the private and personal liability companies, those companies basically are private and they have to invite individuals, maybe they know, so that they can be shareholders. So that can be the difference. But when it comes to tax, when it comes to management, and when it comes to division of profits, they basically have similarities. So you should keep that in mind when you prepare and when you are studying your forms of ownership and how they can contribute to the success or failure of the business, because that is the focus area when we are looking in to this lesson. So with your non-profit, again, we looked into the idea that the intention, remember, is not to make profit, but is to service maybe the community or to service whatever their purpose in terms of the particular company and what they were registered for. So with that being said, hoping this lesson was fruitful and it made sense. And with that being said, keep well. Goodbye.